Ladies and gentlemen, good day and welcome to the investor conference call of Manali Petrochemicals Limited to discuss the acquisition of Penn Globe Limited, UK and its subsidiaries. We have with us today Mr. Ashwin Muthaya, Chairman, Mr. Muthukrishnan Ravi, Managing Director, and Mr. R. Chandrasekhar, CFO and Whole-Time Director of Manali Petrochemicals Limited. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab on the left-hand side of your panel to ask a live question. Please note that this conference is being recorded. I would now request Mr. Ashwin Muthaya, Chairman of Manali Petrochemicals Limited, to welcome the attendees. Thank you, and over to you, sir.
Thank you very much. I would like to convey my personal welcome and also on behalf of Manali Petrochemicals to all of you who have logged in today to join us at this investor conference. So I'm happy to chair this conference just after the announcement of our recent acquisition, Penn. I would like to request Mr. Muthukrishnan Ravi, the MD of Manali Petrochemicals, to take over.
Thank you, Ashwin. So we have a presentation put together for the benefit of the investors on our recent acquisition, and I would like to take you through this. The company's name is Penn Global Limited, and it has two subsidiaries, Penn Limited and PPS. Before we start the presentation, this is a standard disclaimer that I would like to bring to your attention. We have uploaded this presentation onto the server of the BSE server, and we would like you to, I'm sure you would have seen it already, but all the same, these standard disclaimers hold since the presentation contains some forward-looking statements. The transaction summary is as follows. The Penn Global Limited is a company that we have acquired, and it has two subsidiaries. Penn Limited, which is a specialty chemicals company, and Penn Print Solutions Limited, which is a printing solutions company. What Penn does is it manufactures basically foam control agents and similar chemical products. And Penn Print Solutions, which is launched in 2012, manufactures a high range of high-performance silicone emulsions and static and consumables developed specifically for the needs of the commercial printer industry. This acquisition was at a cash purchase of 20.6 million GBP, and the EBITDA for the 12-month period was 2.81 million GBP. We have done EV on cash and debt-free basis with repayment of the outstanding loans. Financing the transaction has been done all through own funds of MPL, and the refinancing of the working capital facility will be done with a new asset-based lending facility. Currently, there is no long-term debt on the books of the company. In terms of future performance, we expect a twofold impact. One is an increase in EBITDA margins and new product sales generation. And we also expect some synergies to be created with Manali Petrochemicals and our subsidiary Nodome Limited. What you see on the right is a summary of the acquisition. It has a 2.96 million EBITDA on an adjusted basis. About 16 million pounds in terms of sales. The company has 29 employees and over 200 products. This is at a glance what the company is all about. The company was incorporated in 1985 in Cheshire in UK, almost about the time Manali Petrochemicals was incorporated. The group's customers are about 60% UK based and the balance outside the UK, with the sales growing in Asia. They have a strong financial performance with an operating cash flow exceeding 2 million for the past 3 years. Their gross margins are very healthy at 40%, and the average EBITDA has been 22% for the last 3 years. More importantly, the products do not require do not use any hazardous chemicals, and there's less regulation and low capital expenditure required to expand and set up new facilities. As you can see, the reason it has over 200 products is because of the application that you see here. It has a wide range of application, these products, because as you know, foaming happens in many different chemical processes. So from bakeries to construction to recycling to surface coatings and to wastewater treatment. I would particularly like to focus on food processing. As you can see, it has a wide range of application wherever foaming is involved, and this food processing is a key industry that we like to focus on. Of course, besides waste and wastewater treatment and surface coatings. Textiles is also a major industry that we would like to work on, because as you know, the textile industry is quite big in India. This is a breakup of the revenue of the company in terms of the products that it makes. Again, it's very clear that the exposure to food industry is significant, and that we saw as a positive in this acquisition, because the food industry we feel is quite insulated from the vagaries of the geopolitics and other events in the world. Foam control, non-food, non-silicone and silicone together make up roughly about more than half of this business, and the rest of it is in non-food applications. When I say non-silicone, what I mean is it can use different raw materials other than silicone. For example, it can use vegetable oils as a base to produce food-based products. So therefore, we have both categories, so they're very diversified in terms of raw material base. Like I said, the group's customers are 60% UK based and 40% overseas based, with a nice 12% diversification in terms of non-sterling business. The supplier base also is quite diversified. Of course, there is on certain products there is an exposure to one chemical company, Dow Chemicals, with 46% of its purchases coming from there. The group is also very heavily exposed to movements in polyols, and therefore, which is a product that Manali Petrochemicals makes, and therefore it gives us some kind of comfort that there is the mother company has a product that it uses as a raw material. And of course, like in the case of Note Dome acquisition, our goal is to create a Penn-wide facility in India, and therefore, with the local availability of the raw material, this will create a sweet spot for the company. We will use this to supply the Asian market. One key point to note here is that with the Note Dome acquisition, our overseas business was about 6% of our turnover. With the Penn-wide acquisition, this has jumped up to 16%. So that's a significant number to know. As chairman has repeatedly mentioned, it is our goal to balance our portfolio between commodities and specialties. And we have been constantly trying to do that through organic specialty growth in India, as well as through acquisitions, Note being one such. And we have now gone a step further through this Penmite acquisition to do the second specialty offering, which is again in the specialty business. We have the objective of making our specialty business 20% in favor of specialties and 80% in favor of commodities. And again, the reason there being India is primarily a commodity-based business for us, and our prime business is still in India. This acquisition also brings more products to MPL's portfolio. Therefore, the chemical specialty business will expand for Manali Petrochemicals and will help us obviously to smoothen the cash flows as the commodity cycles go up and down. And the one key objective to protect the long term is to create innovation and sustainability. We have already made an announcement regarding a sustainable technology that we are trying to develop in terms of Econic, which is substitute a fossil fuel with carbon dioxide. This is another step in the direction. This company is very much sustainability focused for the reasons that we mentioned on the right. Penmite products do not call for any hazardous chemicals used, nor are they hazardous by their own nature. Antifoam supports environmentally focused activities such as water treatment and plastic recycling. You might recall some time ago that in Bangalore there was a foaming of the lakes due to chemicals entering the water. And at that point in time, anti-foaming agents were used to quell the foam. So this helps quite a bit in terms of helping the environment. Penmite has also launched its Responsible Care Improvement Plan in 2011, which is dedicated to continuous improvement of its health and safety practices and its environmental policies. Penmite products are formulated to minimize their environmental impact, and this is work in progress that constantly the company is trying to improve its or reduce its environmental impact and innovate. So what we get through this acquisition is a company that is well diversified, environmentally conscious, sustainability focused, and innovative. The global market potential is something that I would like to talk about. The domestic manufacturing initiative, like I mentioned, would be something that we would try to launch into as soon as possible. So under the Made in India strategy, we expect to create a new subsidiary for Penmite called Penmite India Limited, which will again create or mimic a Penmite in India. And the market for India is something that we speak about in the middle column, but it's a very growing market, and especially agriculture and food industry will consume quite a bit of anti-foaming. Taking advantage of the lower manufacturing costs in India, that's obviously an advantage setting it up here. And of course, availability of raw material through Manali Petrochemicals is definitely a plus. And through this strategic IP know transfer to MPL, we also try to grow the R&D effort, because MPL has a wide base of R&D experts who can actually use the IP that we get from Penmite to diversify their own portfolio and launch new products. So that's something that we'll definitely do. The global anti-foaming market is quite big. It's about $10 billion, expected to hit $10 billion by 2030, with a CAGR of 5.2% from now to 2030. Due to the rapid expansion of food and agriculture and the paints, inks, coatings, and adhesives industries. It's expected that the Indian agriculture industry will reach about the 142 billion by 2027 exhibit a growth of about 12.3% during 22-27. So therefore, this will be a focus industry for us when we create the Penn India facility. Indian paint industry is again a very growing region, a growing market, and we would like to be a part of that growth. And that again will be something that we will focus on besides the food industry. So in the process, there is some of the things that are work in progress in Penn is what we have listed in the last column. There is some work going on in securing a huge deal with a potato farmer in North America who would use this to contain the starch production in the manufacture of potato chips. Supplying our fertilizer company, which is our own company, SPIC, with anti-foam is another option that is in front of us. We also try to work with large Indian manufacturers on their anti-foaming requirement. For example, sugar. Sugar industry uses quite a bit of anti-foam, so that would be something that we would look at. Penn Global has a very strong market share in Scotland on fish farming. They have over 90% market share. And that is something that we would try to use and leverage on when we grow our business in India. Because fish farming, as you know, is quite a big business here, and we would like to try and leverage on that. And also in the construction and water treatment industry, we will try to grow bigger. So, I mean, this is something that we have as by way of presentation, but obviously this doesn't cover all the points that you may want to seek clarification on, and we are here to answer any questions you may have. Just before I close, I would like to mention that Amchem Singapore, which is a subsidiary of MPL, completed this acquisition today. So that's something that I would like to mention.
So can we begin with the Q&A session?
Yes, please go ahead.
Yes, please.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. The operator will announce your name when it is your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. You may also send questions via text from the Q&A tab. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anshul Mittal from Care PMS. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah. So I wanted to start with few questions. So firstly, do we plan to manufacture these pen products in India and sell over here and other Asian countries, or import from Europe?
The intent is to actually start manufacturing here and sell in India and other Asian regions.
So do we have any target in mind that, or in terms of contribution expected going forward from Asian countries?
I think you mean in terms of market share?
Yes.
So we have to analyze that. Our focus, obviously, to start with will be India, and then we'll slowly expand to other regions, just like how we have done with Node Dome. So that would be our focus. So I mean, as you know very well, Indian market itself is a huge market. So we would like to tap onto that first before moving into the while trying to again at the same time leverage into the Asian markets.
Okay. Sir, so and what is the manufacturing capacity, current utilization ratio, and why are there only 29 employees in the firm? So the number seems quite small for Penn.
No, that's the nature of the industry because in specialty chemicals you don't need that many employees as you would need, for example, in a commodity kind of setup, and that's one reason why we have a smaller facility. The capacity utilization is significantly high, and they in fact they are working on expanding more. Exploring more markets in order to even expand further on the capacity.
So what would be the current capacity in terms of number, and how much are we planning to expand going forward?
The expansion plans are not firm yet. As I mentioned during the presentation, they are looking at a huge, a potentially huge customer in the US, and if that fructifies, then our expansion plans would be something that we would be looking at. But today, as we speak, the capacity utilization is somewhere around 85 to 90%.
Okay. And what in terms of unit, what would be the manufacturing capacity in total?
The manufacturing capacity is somewhere around 40,000, 4,000 tons. I checked the number.
Oh, understood, sir. And sir, considering the current status as there is recession in UK and impact of power crisis, how much is the exposure to Europe and which other countries do they sell, barring US as you mentioned?
So, like I mentioned in the presentation, 40% of the sales goes into Europe, and that there the exposure is mainly to Germany and such countries. Yes, there is some short-term blip in terms of demand in those regions, but it has been always our focus that we don't do any growth plans looking at the short term. We are in it for the long way, and over time these swings will kind of even out, and I think we will achieve our objective.
So, sir, the current numbers are considering the impact on margins of the power crisis, or can we assume these are sustainable numbers going forward?
The power is not a big component of this production unit, so I think that may not impact this facility that much. So these numbers should be sustainable if not growing.
Okay, that's great. That's good to hear, sir. And sir, in terms of our existing business, considering that now imports have started, what are the sustainable prices and margins? So, in terms of trying to understand, are the Q2 numbers sustainable going forward, of our existing current business?
I mean, without Q3 closing, obviously we cannot, talk about the exact margins and such. But what I would like to say is that our company's performance is in the range of pre-COVID levels. And the COVID year was an exceptional year for Manali Petro, because of the disruption to supply chains and such. But then again, we are now back to where we were in pre-COVID. And as you know very well, the numbers that we were hitting during the pre-COVID years, and that's where we are at today. So the raw material prices and the weakness in China are obviously impacting our margins, but that should over time get sorted out.
Okay, sir, understood. And sir, how is our current subsidy state? What is the status of our PG expansion plan, and when do we expect to start commercial production of the same?
So PG expansion has reached a significant milestone where we have secured the environmental clearance from the ministry. There is one more clearance that we need from the local state government, and once we get that, we hope to complete that within 24 months.
Okay, understood, sir. And how is the subsidiary Notedome performing, sir, currently? And are they also facing any pressure in the because of the global geopolitical issue as well as the European crisis?
So Notedome is not insulated from the world event. So Notedome will does face some headwinds, but again we are working towards increasing the turnover and improving the margins to get back to where we were before.
So okay, sir. Okay, sir. That's it from my end. Thank you.
Thank you very much.
Thank you.
Thank you. The next question is from the line of Gaurav Kumar, an investor. Please go ahead. Gaurav Kumar, may we request you to accept the prompt on your screen and unmute your microphone and proceed with your question?
Hello, sir. Am I audible?
Yes.
Yes, please proceed.
Hello. Good evening and congratulations for the acquisition. I have three questions. Hello. I think there is some disturbance in network. Hello, am I audible, sir?
Yes, I can, but there is some background noise.
Sir, actually, I have three questions regarding this acquisition.
Yeah.
First question is that I wanted to know what would be the potential impact of this acquisition on the top line and bottom line of Manali Petrochemicals on consolidated basis.
Right. So, in the presentation, you would have seen that the top line of this company is somewhere around 15 million GBP, 16 million GBP. So we can assume that that number would be something that would get consolidated here, and it had an EBITDA of about 2.96 million in last year. So around that number should be what we should be seeing going forward, and obviously our intent will be to improve on that.
And sir, next question is that I have been referring the annual report for the last 3 years, and consecutively I have been noting one thing, that a land issue with the Tehsildar is pending. What can you explain? What is the exact status? Because every time it's the same thing mentioned in the annual report, that the company has been giving representation to the authorities.
Right. So we have a leased land from the government, so which is due for extension, and that extension is something that we are seeking from the government, and that is a process that is going on for quite some time, as you rightly mentioned. But we hope that we can sort it out very soon and have the lease extended.
Okay, and sir, last question is about the supply. As you mentioned that the entire world is facing supply chain disruptions. So, is Manali Petrochemical, what kind of disruptions Manali Petrochemical is facing in its supply chain, and what are the steps the management is taking to mitigate all these disruptions?
So we take we have one of the things we try to do is in consistent with the Make in India objective, we try to maximize sourcing from local suppliers, but also when it's inevitable to import, we make sure that our inventories are well managed to not enter a situation of stock out, while at the same time managing the logistics costs. So that's the way we manage the supply chain disruptions. In terms of our markets, as you well appreciate, Indian market being very huge, our entire market is within the Indian subcontinent. So therefore, we are not that much affected by the world events in terms of supply chain.
Sir, if you could allow, I have a follow-up question.
Sure.
Hello, sir. Am I audible?
Yes.
Yes.
Sir, actually, as it's been mentioned in the annual report, that the Indian polyglycol market is mainly dominated by imports, and major big players are doing their petrochemical products in India. So, what are the steps and representations company is taking? Are you giving any representation to impose anti-dumping duties or anything else, so as to protect your market and your position in the market?
I think we believe that we have to be profitable on our own without the protection from the government. If the protection from the government comes, that is an icing on the cake. But then again, our objective is always to keep our costs low, our raw material purchases smart, and logistics costs low, and that's the way we would like to operate.
And the free trade agreement between India and UAE, does it impact your business prospects?
The wordings are not out yet. It's just an in principle agreement. So we have to see the wordings to see what are included and what kind of duty benefits we get.
Okay, so thank you very much. Congratulations once again.
Thank you, brother. Thank you.
Thank you. A reminder to the participants: to ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Hello. Yeah, am I audible?
Yeah.
Yeah. Hi, sir. Thank you for giving me this opportunity, and congratulations for this acquisition. One thing I would like to know that since in MPL we have currently close to 6% on the specialty chemical side, and with this acquisition it would be 16, and probably going forward we will be targeting at 20% kind of specialty chemical contribution. So just wanted to understand what sort of margin this Penn company was enjoying for last 2-3 years, and post this acquisition, what sort of margin addition we should be expecting.
So I think in the presentation we had shown that average gross margin was about 40%, and the average EBITDA margin was 22% for the last 3 years. It will be our aim to sustain and grow that number.
Okay. And can we get the last 3 years top line growth of this company, Penn Global?
We can share it with you. I don't have it readily, but we can share it with you.
Okay. So my purpose was that only, that how this the top line trajectory has been moving and going forward. I mean, apart from MPL growth, how this would be adding to our overall consolidated growth, which basically industry would be targeting. Because currently, if we see this, we are hearing some slowdown on, paint industry, which is majorly lacking because of slowdown in textile industry. So already these two industry are there in the presentation, as I say. So which basic you can say industry would be there where we would be focusing, and which would be contributing maybe for the current 1 year or so, and going forward then probably which few other industries would be there where we can be targeting to extrapolate our numbers.
If you saw the presentation there, the revenue breakup, the exposure primarily is to food for the industry, which seems to be quite robust. And again, having said that, each country has a different market base. And in India, agriculture and food again is a very big market. So we would try to focus on that and leverage on the company's strength in the food industry.
Okay. And just wanted to understand which chemistry basically is involved in this Penn overall product profiles, how it is actually getting integrated with our business.
So, in terms of chemistry, it's like they use polyols, and silicon-based emulsions to silicon-based products to make like a mixture of this product, which is what we are talking about, the anti-foaming agents. So this, like I said, has goes depending on the application. The mix is a bit different, and the additives are different. But basically, it's an operation where these two primary raw materials are added with a bunch of other additives to make it suitable for different applications. So what is used in, say, for example, food industry may not be used in cable industry, and that may not be used in the bakery industry. So it's all a bit different from application wise.
Okay. So my purpose was just to understand what sort of entry barrier is there, and what sort of competition we are facing right now, maybe, or going forward we would be facing in this particular segment.
No, like we said, you've seen the last 3 years numbers of this company, which has been quite healthy, and we also know the kind of industries that it serves have a huge growth potential in the Indian market, and the numbers are in double digits in terms of CAGRs. So we should see healthy performance of this industry. Of course, it's all subject to a lot of ifs and buts, but we do see that there is a lot of potential for this industry.
Okay. So any competitor you can mention for this Penn Global?
Competition?
Yeah, another peer company.
Name of the company?
Peer competitor for
of this Penn Global, which basically which are the competitors for us?
There's a company called Blackburn that is also in the same business.
Okay. That's it from my side, sir. I'll come back in queue. Thank you.
Thank you for your questions.
Thank you, Rohit.
Thank you. A reminder to the participants to ask a question. Please click on the Q&A tab on the panel and click on Raise Hand button. Thank you. The next question is from the line of Anuj Jain from Green Portfolio. Please go ahead.
Hi, sir. My question is regarding the synergy that you were talking about. You said that there will be synergistic benefit with this acquisition coupled with our asset in the form of NodeDam and NPL. I just wanted you to elaborate as to what kind of synergistic gains are we seeing in future?
So two or three things. One is on the raw material side. Like I mentioned, polyols are used in the manufacture of anti-foaming agents. So therefore, Penmite would have an advantage with Manali backing its raw material requirements. That's number one. The second thing is on the industries that we service. For example, we service food industry, food and flavoring industry. We go into medical, and we have several wide applications in terms of our portfolio today as Manali Petrochemicals. So when we create Penmite India, ultimately these connections that we have and the network we have will be leveraged to gain access to these industries.
So would it be, are you suggesting that Manali Petrochemical will be meeting the raw material requirement of Penn Global, from India? Because, you are not exporting PG or polyol right now currently from India.
No, we are not. So what I was trying to say is that, polyol goes through cycles in terms of demand and supply. So there would be requirement of polyol sometimes when it's tight, sometimes when it's not so tight. But we don't have to physically move our product to Penmite Global for it to get our product. For example, we can have a swap arrangement with their supplier today, and there are several other innovative ways to still get our material to them. without incurring much cost, logistics cost. So we would attempt one of those.
So, sir, does this synergic, I mean, you mentioned node DOM also when we were talking about synergy. So, how come node DOM get into the picture?
Node DOMs will be more in terms of shared services. So we could have, say, for example, common IT, common purchasing, common say some synergy in terms of marketing. Those are the kind of synergies that we are talking about.
Okay, fair enough, sir. So, sir, I mean, you were talking about manufacturing these products that Penn Globe currently manufactures in India. So, if I have understood it correctly, I want your confirmation on that. That SPIC would be buying these products, anti-foaming agent from the entity whenever we start manufacturing in India, and this entity can buy raw material from MPL. Am I right in saying that?
No, anti-foaming agent is the end result of using MPL material. So what Penmite does is it buys raw materials similar to what MPL makes from other suppliers who are competitors of MPL and converts it into anti-foaming agents. So our aim is to create that facility in India where we would use the MPL raw material and produce the anti-foaming agents.
So, sir, I mean, have you done any working as to, I mean, when we can see that manufacturing happening in India? I mean, do you have any plan currently for that? Any numbers you can share? Like how
we just completed the acquisition. Sorry, we just completed the acquisition today. So we will obviously work on the plan and keep our investor community apprised.
Right, sir. One quick question also, sir. I mean, suppose whenever we enter into manufacturing of anti-foaming in India from the IP of Penn Globe, so I wanted to understand what kind of market potential does India has and what kind of competition we will face in India.
Yeah, so I think that was again mentioned in the presentation. If you see about the market potential, I will go through those numbers again for your benefit. Basically, what we said was that the potential is very big for India. We expect that the agriculture industry will have a CAGR of 12.3% during the next 5-year period. And this industry needs a huge amount of anti-foaming agents. The other industry that is rapidly growing in double digits is the food processing industry. And that industry again would use anti-foaming agents. The third industry, which is very, very big in India, which every chemical company has, is water treatment facility. So this water treatment facility, through its natural mechanism, has foaming. So that will need anti-foaming itself. So therefore, there are many other areas that we can enter into: construction, paints, and the cable industry, for example. The manufacture of cables, in order to avoid bubbles coming up on the surface, this foaming is used as a layer. So that can be another application that we can use. And cable industry is very big in India as well.
Got it, sir. Got it. And who would be the competitors in India who are manufacturing anti-foaming in India?
There are many small players in India. Like there are almost 20-30 people who are manufacturing the small scale, medium scale. But we would be of course working with the IP of Penn, which we hope will give us a competitive edge.
Okay, sir. One last question. I'm sorry, I'm taking too much time. So you were answering a question regarding the, where you mentioned that you are working at pre-COVID levels. So I mean, I was seeing the numbers at pre-COVID level. We were at single-digit operating profit margin. So can we expect that 8 to 10% kind of a margin is something to expect in future? I understand that geopolitical situation is very volatile. But is it fair to assume that this would be the normal market?
I think it's very well. We wouldn't venture on number, but we would be somewhere around those levels which were there before COVID. So we can only say that now.
Thank you, sir. I will be in the queue. Thank you.
Thank you.
Thank you. The next
Thank you.
question is from the line of Amit Doshi from Care PMS. Please go ahead. Amit Doshi, your line is in talk mode. Kindly accept the prompt on your screen.
Yeah, am I audible?
Yes, sir, we
Yes,
can hear you now.
yes.
Please proceed.
Yeah, so just one point on the valuation part. We got this company at a very nice valuation. I mean, when we are speaking about specialty business, while R is commodity, and it's we got it at a similar kind of price. So, is it because that the last 3 years average that you mentioned are because of that typical supply chain issues and a lot of chemical companies got benefited? And therefore the margin fire, and therefore this valuation seems to be low, or am I missing something? You can clarify.
No, I think I would like to take credit for it through the negotiation process, but in reality, it is actually we paid what we thought was the right number for that, given its potential and its performance. Obviously, we paid a valuation for its work in its current mode of operation. And like I said, in addition to that will be the benefit we would get by recreating that in India, which is not factored into the valuation, which is why I think it gives a perception of being a good buy.
Okay. Because the specialty company then having a 18-22% margin available at low valuation. I mean, why would somebody sell the business at this price? Which typically a commodity company would trade at.
I mean, without going into the heads of the seller, I would say that they would. It's also a family-run business, so they have their own compulsions. And I think more importantly, they saw in us the way we have run Note Dome. They saw in us a company that actually values traditions and the way things were done, and not disturbing the status quo, but at the same time growing the company. And that, I think, played a key role in helping them decide to go with us. And again, to say there was competition for this business from other multinationals, and we were happy to say that we got it despite that.
Okay. Great. Thank you so much. All the best.
Thank you, Amit.
Thank you.
Thank you. Sir, we have a text question from Avinash Gorak from Profit Mart Securities. The question is, by when can we expect revenues from this acquisition to get reflected in the financial going ahead? And can we expect better performance in our existing business considering the drop in crude oil prices? Thank you.
I think from now on it will get reckoned in our books, right? So today we close the business. So from now on the numbers will start reflecting on a quarterly basis. And the crude oil price is here and there. So I won't say it is dropped because again it went up yesterday. Then there is a lot of strife happening around the world. So I won't say that the crude oil prices have settled down. So we have to just wait and watch.
Thank you. We have the next text question from Lohit Sinha, an investor. The question is, what will be the net cash in books after this acquisition? Any possibility to reward the shareholders by way of buyback or special dividend? Thank you.
It should be about 200 plus crores. And she want to take that action?
No, I think, for us, I mean, let me answer that question. I think business growth is very important. So everybody knows what is the cash position which is being disclosed in the books of accounts. You also know how much has been basically set aside for overseas investments. So it's very easy for you to know how much of cash is available in the company. So with this cash, first of all, we need to implement our expansions in India, which have to be completed, and it has been we've reached a fairly advanced stage in getting all the approvals. So construction will now start, and money will be required to complete that. Overseas expansions we have already done. We still have some funds left to look for some more opportunities. But after all this, definitely there will be some, liquidity available in the treasury. We will evaluate what is the best use of this and what is the best for the stakeholder value, and then take an appropriate decision. And as soon as we know our, costs that are required to be met with on our expansion, which hopefully will not be very much more than what we have already targeted. So our focus is growth, both in commodities in India and M&As which we are doing. Following that, cash utilization will be evaluated, and we will decide what is best for the stakeholder value creation.
Thank you. The next text question is from the line of Pawan Kumar from Kabir Capital. The question is: 1. What is the total capex requirement for PG expansion of 50,000 tons? Second, what kind of consolidated EBITDA margins can we pencil in on a steady state over the medium term? Thank you.
So we've just got an approval for 100 crores for the PG expansion. And in terms of EBITDA margins, I don't think we can give you a forward-looking number. But they will be. We have seen EBITDA margins of Manali Petro over the past years, so they would only improve on that with the PG expansion. Other than that, I don't think it's possible to give a specific number.
Thank you. A reminder to the participants: to ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. Thank you. The next question is from the line of Anuj Jain from Green Portfolio. Please go ahead.
Sir, I was reviewing the numbers of Note down for since acquisition. I think it was in around 2018 or 19. Sir, there has not been any growth and profitability in Note down. So what actually is happening there, and why does it look so dismal? And secondly, in the annual report 2021, I think you have mentioned that some of the products have been launched in India from Note down. The revenue contribution is not very much visible. Is it still in nascent stage? So a view on that also.
So in terms of Note Dome, after the acquisition, we have had some problems with the raw material prices and availability, which has actually been the reverse. The extraordinary year that we saw in MPL last year, the exact opposite of that happened in Note Dome because of the high raw material prices. They got hit, being a specialty company, and that caused numbers to go down significantly. We are slowly recovering from that situation now. In terms of India business, we are growing the India business. Today, the Note Dome business in India on certain categories of products is close to 45% market share, and we are growing the business. But there are certain constraints in terms of products that Note Dome makes on a high margin basis, and on those products application in India. So we are trying to slowly get into those applications and see where we can go.
Sir, how much of the this, how much is the sale in India from the node down product so far? I mean, for let us say for quarter 2 FY23.
So roughly, I would say we are somewhere around 40 to 50 crores in terms of the sales on node dome business in India on a yearly basis.
Got it, sir. Got it. And sir, another thing that I mean, I'm not a person from chemical background, so I mean, you are again and again mentioning the agreement with Econic UK, wherein I mean, you are going to change the methodology, I mean, the process of manufacturing. So I mean, I wanted to understand as to, I mean, since you are mentioning it again and again, I think that it must be very important. So I wanted to understand its importance for MPL going forward. Suppose we are able to commercially put into practice and entire production shifts to the new process. So I mean, how you can describe the importance of this agreement and this process going forward for the company?
So once commercially successful, this product will replace a small percentage of our raw material, which is fossil fuel based, with carbon dioxide, which is environmentally unfriendly. So what we do is we suck out the environmentally unfriendly material from the environment and use it as a key raw material to substitute a fossil fuel. So that is the environmental benefit. And the idea is to show that green need not come at a cost. So we are going green where we are sucking out the carbon dioxide, but we are replacing a more expensive material with a cheaper material, which is CO2. Therefore, we are achieving two objectives. One is improving our margins, at the same time aiding environmental protection.
Sir, just out of curiosity, I mean, why did you mention part production? Why not 100% production can be shifted to this process?
The technology today doesn't allow it.
Okay, got it, sir. I'll be in queue. Thank you, sir.
Thank you.
Thank you.
Thank you. We have the next text question from Gaurav Kumar, an investor. My question is for Mr. Chairman. AM Group is committed to sustainability, so I just wanted to know how management of Manali Petro is harnessing the potential of renewable energy in its day-to-day operations, and is transition towards renewable energy feasible vis-a-vis conventional sources.
So I will just give a big picture, and then Ravi could probably give some details. See, renewable energy, in my view, cannot completely replace our conventional energy. So wherever possible, we will try to use renewable energy. Wherever possible, we will move towards cleaner gases. So this is something that we are constantly doing. But what I want to put down here clearly is there is no situation where completely renewable energy will take over conventional energy, because also we need to look at costs, right? Sometimes renewable energy is not cheap, it's expensive. So you also have to look at costs, and you have to balance between a mix of fuel with cost. So this is one part of the sustainability. The other part of sustainability, which Ravi has also mentioned, is on trying to see how we can bring in the green element into our finished product through introducing greener raw materials. There again, like what Ravi said, the technology does not permit today to make it net green. So we are slowly going forward to becoming green as far as technology allows, as far as our process allows. So these are the efforts which we put in to create sustainability. And I'll let Ravi add if he wants to do anything.
I think you're right, because we can never go totally towards renewable energy, but our efforts are always in that direction, provided the economics allows it. And which is why we are signing agreements with wind power companies and solar power companies to generate the energy we want, but still maintaining our requirements from conventional sources.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. R. Chandrasekhar, CFO and Whole-Time Director of Manali Petrochemicals Limited, for closing comments. Over to you, sir.
Well, on behalf of MPL management team, I thank one and all for participating in today's call. Of course, all your questions and the feedback are very valuable to us. We hope the interaction was quite informative, and we look forward to meeting you soon. And thanks a lot. Have a good day.
Thank you.
Thank you.
Thank you, sir.
Thank you.
Ladies and gentlemen, on behalf of Manali Petrochemicals Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect. Thank you.
Thank you.
Thank you.